People are asking the question, is Bitcoin about to go into a bear market? Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about what we should do if Bitcoin goes into a bear market. Now, I don't believe at this time that we have confirmation that Bitcoin is in a bear market. I believe that we're in an accumulation phase in a longer bull market. We've been in a downtrend for about 4 months, but I don't think we're in a bear market right now. But if we do go into a bear market, and if we do trade sideways for the rest of this year, many of you guys want to know what would my strategy be for continuing to make profit and set myself up for the long term in that type of market. So that's exactly what I'm going to talk about in today's video. What do we do if Bitcoin trades sideways for the rest of the year, or Bitcoin has a major correction and drops down into the low 30s or maybe even the high 20s? How should we handle a market climate like that? I'm going to be outlining exactly what I will be doing and what I did back during the 2018 bear market when I witnessed Bitcoin trade sideways and then have a major 50% capitulation within the span of a month in 2018. I'm going to tell you what I did. I'm going to tell you what I'm going to do, and hopefully you'll walk away with a better perspective on what the next year will hold. Before we get started, if you enjoyed today's video, make sure to hit that like and subscribe button. But without much further ado, let's go ahead and dive right on into it. So, to preface, this video is for the person who bought Bitcoin at $45,000 on the uptrend back in October. They bought Bitcoin at $55,000 on the uptrend in early November. They bought Bitcoin at $60,000, or maybe they even bought on the way down. Let's say they bought in October, not October, back in December when Bitcoin was trading at $40,000 to $50,000, and now you're down. You're down 20%, you're down 40%, you're down 30%, you're down 27%, whatever it is, you're down a little bit. And you still have cash on the side. So you're thinking, okay, how do I make up this loss? Do I just sell now, cut my losses, and then walk and then go try real estate because Bitcoin didn't work? Or do I stick in Bitcoin and cryptocurrencies because it is the most powerful solution to one of the biggest problems humanity has ever faced, which is the inability to store wealth into the future? Do I stay with Bitcoin and cryptocurrencies, or do I walk? And if I stay with Bitcoin and cryptocurrencies, how do I make the most out of this market? That's what we're going to be talking about. So let's take a look at the chart. As you know, Bitcoin has been in a downtrend ever since the fateful day of November 10th when Bitcoin hit $69,000. It is down currently about 40% from the all-time high. So let's first start with perspective, because perspective is the most important thing that you will gain in Bitcoin and cryptocurrencies. During a bear market, oftentimes Bitcoin will drop 85%. Back here in 2013 to 2015, Bitcoin dropped $1,061. Doesn't sound like a lot now, but at the time it was 86% correction. Over here on December 25th, 2017, roughly around the time we hit 20K back in 2017, all the way to the correction, we dropped 85%. Currently, Bitcoin is down only about 40 to 45%. At the maximum, we've dropped about 52%. So I would argue that we're not in a bear market right now, not just for that reason, but for many others, including the sentiment, including the on-chain metrics, including interest in the space, including brand awareness, including government adoption and retail and institutional adoption of crypto. There's many reasons why I don't think we're in a bear market, but even if we were in a bear market, we would be seeing worse to come. A bear market oftentimes leads to an 85% correction. Now, we're in a different market now. I don't think we would see that, but I do think that if Bitcoin did go into a bear market, we could see a back test to $20,000, which would be 70% retraced. That could very well happen, and we should not discount that just because we don't want it to happen. Not wanting something to happen and then not preparing for it is the exact way to get blindsided by that thing and then get wrecked because of it. So we have to entertain all possibilities. I don't think it's going to happen, but we're going to talk about what we will do if it happens. Now, something we've seen over the last couple of months is quite a bit of sideways action on Bitcoin. We saw the exact same thing here in 2018. Whenever the market's going up, everybody gets hyped and excited because, well, they're making money. Whenever the market's going down, everybody gets FOMO, gets FUD, and they get freaked out because they're losing money. So they have their eyes fixed to the screens and they have their attention on their portfolios. But it's when Bitcoin trades sideways that people start losing interest. In the downtrend, people want to hear comforting words. They want to hear words. In the uptrend, people want to hear exciting, happy, celebratory words. They want to hear words. In sideways trends, they don't want to hear anything because they've left. But you know, the funny thing is, I got into Bitcoin right over here, about almost 5 years ago now. I ran a YouTube channel all the way through the 2018 bear market right here. Very little interest in the space. I would make a video every single day. It would normally get about 2,000 to 3,000 views. On a good day, I'd get 5,000 views. Now, if we get 5,000 views on a video, the video did not do very well at all. Back then, I was making a video every single day, despite the fact that Bitcoin wasn't doing hardly anything. In fact, there was a period of time here where Bitcoin traded sideways for the span of 3 months at the end of 2018, from early August all the way to early November, traded sideways for 90 days in a range about 10% tall. There was no news. There were no technicals. There was nothing going on. I have no clue what I talked about because there was nothing to talk about, but I kept talking about it. I kept staying in the market. And you know what I did? I kept learning. I used that time to grow my knowledge. And then you know what happened? Bitcoin dropped 50% in 30 days. Bitcoin had a capitulation all the way down to $3,000, and a lot of people that had not been shaken out yet left. But then the people that are worth hundreds of millions, if not billions of dollars in crypto now and started investing down here between $3,000 and $4,000. They only knew to invest right here because they stayed in the space right here. Let me make that very clear. If you want to buy the dip, then you can't leave when you get bored. Because when the dip comes is almost always going to happen after a period of boredom. What are we doing right now? Bitcoin is trading sideways. We can admit it. It's okay. We're not in the wrong to admit when this is going on. Bitcoin is super freaking boring right now. And Bitcoin could go into a massive rally here and rally all the way back up to all-time high. Or as in 2018, it could undergo a massive 50% capitulation all the way down to $20,000. It's possible. So what do we as traders and investors do with this market climate? Because if you're in an uptrend, okay, great, buy and hold. Okay, great, if you're in a downtrend, all right, try and take profits if you're at the beginning of it. Otherwise, just kind of hold on to it and wait for the new rally to start. Here's what I did in 2018. In 2018, I continued buying Bitcoin regardless of where the price was. I continued accumulating Bitcoin regardless of where the price was. When people would buy CT2A in Bitcoin, I didn't sell it. I kept it in Bitcoin. I kept accumulating Bitcoin. Then when the price dropped 50%, I looked at my portfolio and I said, wow, that kind of sucks. And you know what I did? I bought more and brought down the average entry price. I was dollar cost averaging through all of this. I remember back over here when Bitcoin dropped 50% as a result of the pandemic starting, I bought Ethereum at $88. Ethereum now on a dip is worth $2,800, and I profited on that because I bought those dips. Number one, this is what I do whenever Bitcoin is trading sideways and going through major capitulations. You buy more. As the great investor Warren Buffett once said, and you can agree or disagree with some of his thoughts on tech stocks and railroads and all this stuff, whatever. The point is, worth $100 billion. You might know a little bit of something what he's talking about. He's been doing this for, 3,000 years. He says, buy the dips when there's blood in the streets, even if the blood is your own. Even if you're down 50%, buy more. If it's a proven currency or if it's a proven stock that you have very strong confidence it is going to rally. Now, if an altcoin's down 90%, you got to be careful because it might not be proven. Bitcoin's $1 trillion market on a dip and it's still proven. It is not going anywhere. So buying a dip on Bitcoin is safe in my opinion. So number one, the thing I do, BTD. Buy the dip. That's what we got to do. Buy the dip. Don't trip. Buy it instead. Buy the dip. If Bitcoin's trading sideways, start buying it. But how do we do that, Jeb? Well, here's what you do. You don't try and time the perfect bottom because there are people that bought on the pandemic dip back here in March of 2020. There are people back here that bought at $4,000. I bought right up here around $6,000 or $7,000, and I was like, oh, crap, I missed the dip. I didn't get a good enough entry. But you know what? Bitcoin went to $60,000 because the fundamentals are great. Don't be so caught up on trying to get the exact bottom. Instead, have some money on the side for if there is a massive capitulation event that you can scoop in and buy and set up a one-time purchase, but also set up dollar cost averaging. Instead of trying to figure out when's the perfect time to buy, set up on Coinbase to buy once a week, ideally every Friday. I'm not going to get into it right now, but there's statistical analysis that shows Friday is the cheapest day to buy Bitcoin, going back in 10 years of price data. Set up a recurring purchase on Coinbase or wherever for however much money every single Friday. Buy the dips and you will be okay. Dollar cost averaging actually works the best in a downtrend. Why? Because dollar cost averaging, you are lowering the average cost of how many dollars you have to put in to buy Bitcoin. So if you're dollar cost averaging and you buy here and 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 you buy $100 every time you buy, you are adding a lower number to the average. And what happens when you do that? You lower the average. So you want to lower your average by investing with dollar cost averaging on the dips. Now, if you're looking to dollar cost average your profits, then you can do that on the upside. But we're talking about the downtrends. Dollar cost averaging in a bear market is actually what DCAing is built to do. You can dollar cost average in a rally, but it's actually more effective in a downtrend. So buy the dips, set up dollar cost averaging. Number three, the most important thing, last but not least, actually the most important thing is learn. Learn and grow and improve and get better. Because if you don't, when Bitcoin does go into a massive rally, and it rallies as we saw back here in September going through April, and it rallies 600%, adds $1 trillion in market capitalization in less than 8 months, when it does that, if you didn't spend the time growing back here, then you're not going to know how to profit right here because you didn't build the skill sets at this point to figure out how to take advantage of the rise of NFTs, of the rise of DeFi, of the rise of metaverse and gaming, and of the rise of all of these different layer 2 protocols like Avalanche and Cardano and Solana and AVAX. All of these projects, you're not going to know how to take advantage of that. You're not going to know how to make money in that because you didn't spend the boring times studying. If you were not very good at studying, as I was not very good at studying in school, this will come difficult to you. But if you are truly passionate about Bitcoin and cryptocurrencies, it might just come naturally and you might just enjoy it. So I encourage you, number one, buy the dips. Number 2, dollar cost average. Number 3, invest in yourself. Notice, none of my advice, and this is not financial advice, it's just the things that I have learned over my career here in cryptocurrency. None of these things say walk away from the market and come back. You can do that. I think you will miss out on one of the most important times of a market, which is a bear market, because it gives you time to buy and grow. If you buy and grow, you'll be fine. You just need patience. That's the final little seasoning you got to add on there to be successful in cryptocurrency. Buy, grow, be patient. You do those 3 things, you're going to be just fine. So what should we do if Bitcoin goes down to $20,000? The exact same thing that we should do if it goes down to $30,000. The exact same thing that we should do if it goes down to $40,000. The exact same thing, more or less, dollar cost averaging might change a little bit, if it goes up to $80,000. You buy, you grow, and you have patience. If you do those things, you will be successful. So the question is, what do I do if Bitcoin goes into a bear market? I just told you. Very simply, you buy, grow, hold, and have patience. That's what I did. That's where my cryptocurrency portfolio came from, was from having patience, being deliberate, and understanding that getting rich might not take 6 months. It might not take 3 years. It might take 10 years to build the kind of wealth that you want. And at the end of the day, just remember, Bitcoin was not designed to make you rich. It was designed to make you sovereign. It was designed to give you financial sovereignty. It was designed to give you control of your finances back, take it away from the international banking system, take it away from hyperinflating currencies like the US dollar, and put it in your hands so that you have the ability to store money into the future. If you have any questions about whether or not Bitcoin is a powerful hedge against inflation, let's look at what Bitcoin has done over the last 10 years. Oh yeah, that's right. It's rallied 900,000%. So yes, it has been the most powerful inflation hedge that humankind has ever known, and it will continue to do that on into the next decades. So, what should you do? Buy, grow, and hold, and you will be just fine. Tell me in the comment section down below, what is your strategy for a bear market? That's mine. I'd love to hear your thoughts as well. If you enjoyed today's video, maybe share it with 10 friends. Maybe 10, not 9, not 11, maybe 10. Just go share it with 10 friends, because I have a feeling, and I don't say this very often, I have a feeling this video is one that a lot of people need to see right now. I think this is a very important video. So if you know somebody who's in crypto and they're not sure what to do because Bitcoin is getting boring, share this video with them. And if somebody shared this video with you, let me know in the comment section down below. Thank you so very much for watching. Make sure to follow us on Instagram and Twitter at CryptoJeb, TikTok at CryptoJebOfficial. Before I go though, guys, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Hey, you made it to the end of the video. If you enjoyed this video, you should definitely consider subscribing, because we're trying to help you become financially free in these cryptocurrency markets. And also, consider following us on Twitter at CryptoJeb for more updates on the price of Bitcoin and cryptocurrencies. Peace.